Alright, hello guys and welcome back to a new video. Today I want to talk about or I want to answer a question that I get a lot, which is how to count swings or how to reset the swing or from where to start counting your swings. So this is basically the people who watched the master class from Dave, and I believe he talked about this in the first video, at the end of the first video. And I don't know, but a lot of people are focusing on this piece of information alone to frame their trades on the higher time frame, on the lower time frame, and this is not how to do it. When I see a question from where to start counting, I know that this person opened the chart and they're looking to count. From where do I start counting the swing? So this is the whole idea of today's video. How and when do you use swing counting? Okay. First of all, before we start, let me play to you this video right here of Dave talking about it. Okay. So let's review what he said.
Y'all ready? Here's a banger that a lot of people don't know. Now, some people do. Some people do on in my group because I teach it, but here's a banger that a lot of people don't know. The market, if you're counting the pullbacks, these little pullbacks that the market keeps going back and tapping into something, if you count the pullbacks, oftentimes when the market is pulling back, you get 4 to 6 pullbacks. And oftentimes the seventh one fails. Oftentimes the seventh one fails. Sometimes I see the market, it's 3 of them and 4 of them happen, and then it's done. It reverses. How do you know when the reversal is happening? We just taught that, when the violation happens. So even if you're counting these, you're counting these along with looking for these. And when you're counting these, it's letting you know, guess what's coming, bad boy? Guess what's about to show up? Y'all been waiting, y'all ready? And usually the 4th to 6th one is forming around what? Ooh, goodness. The 4 to 6 is forming around the area that it's getting ready to reject from and begin what? Ooh, baby. And begin the 4 to 6 combo slice again.
And this is right here my note on the matter. Simply repeating what he said. Okay, so price on an uptrend, for example, will do. I'm not going to say will. I wrote this when I was just getting started. Let's say when price on an uptrend does 4 to 6 pullbacks, the 7th will likely to fail, and then the market will reverse. Now, this term reverse, that applies to the time frame you are counting on. But on the higher time frame, it's not going to be reverse, it's going to be a simple pullback if we are in a really uptrend. And I'm going to show you with an example shortly. The market will hit a former SND. Suppose that we are not on an all-time high. Okay, let's say we still have zones to the left. After hitting that, and you see we have like 4 or to 7 pullbacks, and then you can expect a reversal. Again, a reversal on that time frame, and likely a higher time frame pullback. Let me now give you an example. So firstly, you don't use swing counting to know where price is going next. That's the first thing. The second thing is that you don't frame your idea on swing counting. If I tell you why did you take a buy from that zone, you don't tell me that you have seen, for example, 1 and then 2, and then you decided to short or to buy from here because you have only 2 swings right here. You don't even know what's going on here. Maybe we are in a downtrend and you see this and you start buying from here. Let me remove some of these things. You see here something like this. A break of structure. Again, you don't know what's going on here. You don't know what's going on the higher time frame. You just open the chart and you saw this break of structure and you see one pullback and you see the second pullback and you want to buy from here. And your whole idea is that because we broke structure and we have only 2 valid pullbacks and we can expect more for the reversal to happen. That's one way to avoid swing counting, or one way to avoid using swing counting. This is the wrong way, okay? Another way is that you might see 1, 2, 3, 4, let's say 5, and you want to short from here. You saw 5 pullbacks and you want to short from here. You see something like this, price breaking the former low, the previous low, okay, after printing 6 pullbacks, and you want to short from here. And you don't even realize what's going on the higher time frame, because price can easily do this. Price can easily break the low, and then here, when you are waiting, price break this low and you are waiting to take short from here, and price will just keep going, okay? So you don't short because you have 6 pullbacks. Now let me give you now the right way to use swing counting. First of all, this doesn't work on ranges. You don't count swings, you don't buy from zones, you don't short from zones. When we are in a range, on a range, you are waiting for price to sweep the highs and you take the short. You are waiting for price to sweep the lows and you take the longs, okay? And basically, ranges are when price, let's say we are in an uptrend, and then price stocks between this low and this high, and you will see price failing to take the high, price failing to take the low, and you see this. Okay, now when you see this and this, we are in a range. Okay, so you need to be careful, and you need to prioritize trading from here, the extremities. So that's a side note. But again, the first thing that you need to do when you open the chart is, I tell you this all the time, is to identify first of all the trend. And the trend is very easy to identify. Are we breaking highs? Are we closing above highs? Or are we closing below lows? Are we sweeping lows or are we sweeping highs? So let's say, for example, we broke this high right here. We have a previous high right here, right? And price is returning back to a zone. Okay? And let's say, for example, that this is the 1 hour. On the 1 hour, we return back to the 50%. And we are in an uptrend, okay? Suppose the structure to the left is something like this. So maybe we have a sweep here. Now, this is a 1 hour structure. We're going to focus on this pullback right here. Now, this pullback right here, let me first extend this. On the 1 minute, we might see lower lows and lower highs. Okay? And let's say we approach the 50% and we have 1, 2, 3, 4, 5, 6 valid pullbacks. Now, based on the higher time frame trend and also the higher time frame that we broke the previous high, we put in an expansion and now we are retracing to the previous zone. So the main concept is this, how price moves in an uptrend, and adding this right here, the swing counting, we can expect a reversal. So you can see that we are not using this as the first idea to buy or to sell. This is just a complementary tool to this. And also this is another use case to it. Let's say, for example, we have 6 pullbacks and you were participating in these shorts from here, right? You were shorting, you are participating in this pullback from here. When you see 6, when you see, for example, 4 pullbacks, right? 4 valid pullbacks, it is time to take it easy and stop shorting, especially if we tapped into an important level like the 30%, right? And definitely when we tap into the 50%, because we can easily see a rejection from, right? So it is a way to, first of all, use it with the higher time frame to time the expansion and the reversal, right? So the expansion, you can time it using this, or you can, in other words, time the end of the pullback, or it is also a way to stop trading, stop buying from zones, or stop selling from zones when you see that we have putting 4 or 5 valid pullbacks. That's one way to use it. Now this doesn't mean that price, let's remove this. Remember that this is the 1 hour. And this is the 1 minute, the trend that we draw earlier. Now this doesn't mean that we are pulling back from here and we see this first valid pullback, the second valid pullback, and you think that the price will keep going and print at least another 2 or another 3 like this. Now price can do this, print the first valid pullback, the second valid pullback, and then you will see this breaking both of these zones, and you think that this is the break of structure to take it higher, okay? And price can easily come back to the downside and keep going. And maybe another one like this, and then this. So just because we have only 2 pullbacks right here, it doesn't mean that we're going to keep going to print another 2 or another 3, and the reversal will definitely happen on the 5th or the 6th, okay? It doesn't work like that. You can go to your charts and you will see it all the time, because we don't have only the 1 hour and the 1 minute. Remember that we have the 15 minutes between these two. We have also the 5 minute also. So what looks like a break here is a 15-minute pullback like this. And these 2 zones are not even visible here on this lake. It will be maybe just wicks here, just wicks on just 1 down candle. And this right here is the zone on the 5 minute. Okay, and then continue to the downside. And then you see this move, which represents this right here, and you think that this is a break of structure. And again, just continue to the downside. Remember that we have other time frames between this one and this one, and don't use swing counting. Don't think that price will always print at least 4 or at least 5 until it reverses. Okay, so it doesn't work like that. Let me give you an example. So now this can answer to you that some of the questions that you asked me. One of them is that from where to start counting. Well, you can start counting after price taps into, let's say, a higher time frame zone, and you will see the break of structure. So that's one thing, and you already know the trend we are, whether we are bullish or bearish. So don't start counting from anywhere. Maybe you are bearish and you start counting the bullish swings. Okay, it doesn't work like that. For example, you go to gold. Gold is, I don't know, in an all-time high, and you start counting the bearish swings because you saw a downtrend on the 1 minute. Okay, so don't be like that. Identify the expansion, the pullbacks, on the higher time frame, see what the intermediary time frames are doing, and then you can use this to your favor to time the pullbacks, okay? So an example would be, okay, this is a good example. You can see that we have, if we start counting, for example, and you can see that we have here, let me use a different color. We have an expansion and then we have a pullback. This is a higher time frame pullback. We likely tapped into a fair value gap to the left. Let's check. Let's go to the 4-hour figure, for example. See what's going on. Or maybe at the daily time frames. Yeah, okay, so on the daily we can see that we tapped into this fair value gap, okay? Now if we go back to the 15-minute and we have the break of structure here. So on the 15-minute the break of structure happened until here. Okay, so the break of structure here. And then we can count based on the definition of the valid pullback. Although I don't use it literally because I know that there are other time frames in play, but doing your multi-time frame analysis is far important than swing counting or counting swings randomly. Okay, so building the narrative on different time frames. You can see that we pulled back into this SNDR, the one responsible for this. So this is the first valid pullback, and then you see something like this. And you think that, okay, this is a valid pullback, it put in a new high, and then we broke it here. And you think that this is, a shorting opportunity. But still, we are in an expansion, we are expanding from a higher time frame daily imbalance, okay? And this right here, this zone, just because we violated this pullback, okay, it doesn't mean that you're going to trade to the upside because this is the 15-minute. On the 1 hour, it's going to be only a sweep, and on the 1 hour, it's going to be something like this, okay, or the 4 hour. This is a pullback on the higher time frame. And let me remove this, and let's continue. We broke this, and then we have this pullback. And then we're going to see this pullback. So now we have what? After, let's say, we reset the count here or something like that. Or let's say, for example, start from here after the break of structure here. So we have 1, 2, and let's say this one. And then on the third, on the fourth, we have the break. But still, the break is still a 1 hour pullback. Okay? So just because we have only 3 right here doesn't mean that you're going to buy the 50% of each one of them every single time. But use it as an overextension or maybe a tool to stop looking for buys. When you see price taps into this zone, for example, on the lower time frame, you're going to drop. So this is a 15-minute and you're going to drop to the 1 minute. And start looking for longs from here, okay? Take it easy and anticipate the pullback that if we have 6 swings, for example. So, to summarize things up, swing counting is not how to read price, okay? This is the last tool to use or can save you from losses when you are constantly looking to buy every single zone. Okay, and it is a tool to combine it with other price action concepts to anticipate the reversal. Let's say, for example, we have this diagram right here. Okay, we expanded to the upside, we pulled back, and then we expanded one more time. This expansion hit a higher time frame zone to the left. Right, a previous zone from the downtrend. Let's draw it like here. Okay, and then the break happened here. Right, the break happened here. And then we tapped into this previous zone and we are expecting that to offer a pullback. And This one right here is very powerful concept. I learned it from Dave. Okay, expansion, we are in an uptrend. Previous zones, I don't know if this called demand or supply, but the previous zones to the left can offer the pullback, and we see this all the time. Now, let's say that from here we tapped into the 50% of the zone, or the 70 in this case. And here we started putting higher highs and higher lows, putting valid pullbacks. And here we printed what? 1, 2, 3, 4, 5, let's say 6. And then we tapped into this zone. So combining the first, which is we took this high and we are in an expansion, and after an expansion we can anticipate the pullback. That's first. The second is that we hit a previous zone that can offer the pullback. And the third information that from swing counting, we are putting, this is the sixth swing, sixth pullback, valid pullback. So from these three, we can time the reversal. So when price breaks this, we can look for shorts to take price lower to something inside that zone, maybe put in the first top from here and the second top and taking another expansion. Okay, so that's one way to use it, but not to rely on it entirely 100%. So I believe that this is the end of this video. If you have any questions, DM me in my Twitter account or leave a comment down below and I will answer you as soon as I can. Now happy trading and good luck.